is brought to you by Stanbic Bank.
Spectrum wants to hear your views. You can SMS at any time during the show. Type Spectrum, leave a space, type in your contribution and name, then send it to 7197. Your views, our interviews on Spectrum, Radio 1 FM 90.
A very warm welcome. This is Spectrum on Radio 1. I'm your host, Edmond Kizito. On Spectrum tonight, do you support the decision by traders to go on strike over the high interest rates? What action should the relevant actors take to defuse this situation and also to overhaul the Ugandan economy? Yesterday, Government, Bank of Uganda, the Ugandan Bankers Association and city traders failed to agree on how to resolve the standoff over interest rates. Yesterday's meeting has today been followed by close discussions at the Prime Minister's office, a process traders were reluctant to engage in at first. At the failed dialogue held at Parliament yesterday, the bankers urged government to address challenges within the economy such as inflation and the depreciation of the shilling if they are to lower the interest rates. On his part, the governor of the Bank of Uganda insisted that the bank cannot intervene, insisting that its decisions to increase the CBR, that is the central bank rate, which led to the increase in interest rates by commercial banks, is justified. The traders are demanding that commercial banks revise the interest rates back to 17% and also refund all the money collected from the accounts from the time banks first raised interest rates. They are closing their shops tomorrow and will also collect all their deposits from the commercial banks. Experts on finance and economic affairs are now suggesting that if the traders act out their threats, the Ugandan economy may be pushed to directly into a recession. They argue that fundamental actions need to be undertaken now to remedy the situation, but also to address the bottlenecks that form the foundation of all the challenges that triggered this economic turmoil. So tonight we will continue to look at some of the key issues surrounding the outcry of the traders to try and understand what actions need to be taken, not only to avert the strike, but also overhaul the Ugandan economy. Our guest tonight, Honorable William Oketcho, former West Budama County MP, also a former chairman of the Budget Committee in Parliament. You're most welcome, Honorable Oketcho.
Thank you very much. Good evening, listeners.
Honorable Oketcho, can you try and give us a diagnosis of this problem? What is the root of this economic turmoil?
The root of this economic turmoil, my friend, is mainly the falling supply of many commodities earlier on, which led to high cost of living. Of course, people were blaming petrol, and oil, and foodstuffs, and so on. But it generally led to a very high cost of living, and of course, in the same vein, very high inflation. Now, when inflation goes high, to control it becomes extremely difficult. And the only institution empowered to control inflation is the central bank. And the central bank has acted following the trend in the inflationary spiral. And I think that's where the problem is.
How do we get out of here? The central bank needs to rein in inflation by tightening the belt.
Yes.
And the belt has cut into the skin. How do we get out of it? How to create a balance?
I think we've got to be patient because there seems to be some light at the end of the tunnel.
Yes.
We're now seeing the inflation rate falling down, coming down.
Yes.
And we're also seeing the central bank lowering his CBR, its CBR, central bank rate.
Okay, well, of course, the central bank has kept it level. It's risen 10 percentage points since they launched it in July, from 13 to 23%, which is a big leap in just about 6 months. But they've kept it level for the first time. Do you see it dropping? Inflation is 7%.
Yes, it because since the central bank has been following inflation spiral,
yes,
and inflation is dropping, definitely they will also have their CBR dropping. And as soon as that is done, the commercial banks will be obliged to also reduce their interest rates.
Do you think the traders can wait?
It is just important that the traders wait, because really there's no solution except to go this way. And the central bank is following what I could call very, very right but stringent measures to actually control the economy for us, to manage the economy.
So basically, of course, the central bank argues that they cannot interfere in the business of the banks, because if something goes wrong, they will come to the central bank and ask them to intervene in their profit levels.
No, but you must also understand that the central bank's fundamental duty is to control the commercial banks, to supervise them, and to ensure that they do what is expected of them as could I call, I mean, they're even also customers of the central bank.
That's true.
Yes, because the banks
they bank with the central bank and they borrow from the central bank.
They borrow from the central bank. But it is very, very likely that this is a trend as we see. Things will improve very, very shortly.
So the belt tightening, we cannot loosen the belt at the moment.
We should not really unduly loosen the belt, you know, because if we loosen, the situation could get worse.
The situation can get worse. Can you try to explain to us the dangers of loosening now? Supposing the central bank loosened money supply, money poured into the economy, how would it destroy the traders? How would it be worse than the current situation for the traders? Talk to them.
Immediately you will see too much money chasing too few goods.
Yes.
And that is another
inflationary spiral.
Yeah, another inflationary spiral.
What happens to the trader, the man in the shop?
And the traders will find it difficult to find people to buy the goods at the prices which they will be having. And the whole thing will go back to where we were about 2 months ago.
The shilling will lose value.
The shilling will lose value. They will not be able to
restock their shops.
Yes, that's true. They will not be able to restock, and that is it. They will also go out of business again.
So they'll collapse.
They'll also collapse.
Faster than they would collapse if the interest rates were kept high.
Were kept high, and also if the government or the central bank right now decides to loosen its belts. But the reason why this is done is to help out in this very, very dire economic situation. Otherwise, you know, I mean, you can't leave it, you know, just to go on like that, because it is not possible to undo itself, so to speak. We have got to ensure that we tighten our belts, and there are of course going to be victims. You know, I mean, in a war, which I would call an economic war of this type, there are definitely some victims. And I mean, as you have seen the papers, SMEs are now the very, very likely people to lose out.
The small and medium enterprises.
Yes, small and medium enterprises.
Listeners, this is Spectrum on Radio 1. Tonight on Spectrum, do you support the decision by traders to go on strike over the high interest rates? What action should the relevant actors take to diffuse this situation and also to overhaul the Ugandan economy? Our guest is Honorable William Oketcho, former West Budama County MP, also a former chairman of the Budget Committee in Parliament. You'll be able to contribute to this discussion either through by sending a text message or calling in on numbers which I'll read out when the time comes. The central bank, Honorable Oketcho, is trying to mop up excess liquidity. Where did this excess liquidity come from?
It has been said that it came from various sources. Elections, I understand, last year brought in quite a substantial amount of money into the market, and the liquidity definitely was excessive, and that has not been very good for the economy. You know? So the central bank had to come in to mop it up.
And so people will be saying, how about money to buy the jets? Did that contribute?
No, I don't think that contributed. You know, the amount to buy the jets.
It went out of the country.
Went out of the country.
But it could have helped to stabilize the shilling.
No, but definitely it was seen that that is not the only source of funds to stabilize the shilling. As you have seen, the bank has been stabilizing the shilling all along, and that's why you can now see that the shilling has dropped from 29.01 to 24 now, which means they got some money, some dollars from some point, and
They managed to stabilize.
Yeah, managed to stabilize.
Let's get this clearly, Honorable Oketcho. As an economist, as an expert on macroeconomy, economics, you are saying that if the traders wait 3 months, things will get better. If they don't wait, if the government, and maybe God forbid, if the government acceded to their demands, it will be worse for them. They will close shops.
Yes, that is it. That's the only way. Because I don't think the government wishes bad for the traders. No. They're the ones who produce the taxes, who make sure that the government gets revenue, and so on. And it is in their interest that the government acts the way it is acting.
It is in the interest of the traders.
Yes.
If they accede to the demands of the traders, you say the shilling will become weaker. It will be impossible for them to restock their shops. And they'll probably go home and deal with avocado or something like that.
That's it.
Let's talk about alternatives to this policy, which clearly is harsh, even though in the short term. What are the options that the central bank can use? Could they use cash reserve ratios? Allow banks to keep more money with themselves so they can lend it?
I think they've already done that. I think they've raised the amount of money the banks needed to deposit with the central bank.
They are supposed to reduce that so the banks have more money to lend. Would that help lower the interest rates?
That would not. Here we are trying to mop up the excess liquidity in the economy.
So this would be counterproductive?
This would be counterproductive. Definitely, it will be definitely counterproductive. Of course, there are two policy measures.
Yes.
The fiscal policy and the monetary policy.
Yes.
Which normally are used, intermittently, so to speak.
Right.
Of course, the bank is now focusing on monetary policy. Fiscal policy is for the Ministry of Finance,
right,
for the government,
yes,
taxation and so on.
Right.
Let the monetary policy be made to play its role, at least, so that we see how far we can go. Sooner or later, if that fails, then the government has got to go into fiscal policy measures,
by raising
taxation and this kind of thing.
Raising taxes on imports, luxury goods,
so on, and that also may affect the traders.
So you think that could be worse? They would sell less, fewer goods?
Yes, we will definitely sell less. Because you cannot bring in goods here at very high prices and you expect people who earn little, so to speak, to buy.
So you're saying this is the easy way out?
This is the easy way out, and it is of course one of the two policy measures, fiscal and monetary, that the government and central bank can apply. So
you're saying the alternative is much worse, raising taxes?
The alternative is much worse, and they will again complain. And actually not only them, even the local people will again complain. Now you see that it is the traders, those with the businesses and so on, who are complaining. The ordinary man is keeping quiet because it doesn't really affect him much, unless these other ways the traders can pass on this risk to them, which I don't think is possible.
So this is a tightrope. The waters, walking over the waters on a tightrope, crocodiles underneath. If we change tack, things will be worse.
Things will be worse.
Why is the government not communicating this clearly? Why are the traders not getting it?
I don't know really why the government is not doing this. But I thought they had a meeting yesterday.
Some of them felt insulted. They said one top official insulted them.
Yeah, but of course you can't insult people at this stage. You need the cooperation of everybody to manage this situation. This is a national crisis. A national crisis. Yes. So you have got to make sure that everybody plays his role properly. You don't annoy anyone.
Honorable Oketcho, let's look at what managers call scenario planning, forecasting. Let's look at what happens. They close their shops tomorrow, which is Wednesday. They get their money from the banks. Paint a picture for us.
That is what we call a run on the banks.
Yes. Let's first talk about closing shops, because these are two big things, really. Let's first talk about shop closures. Who does it affect?
It affects the ordinary man.
Yes.
First, because you don't have anywhere to go to buy goods and maybe services as well. It affects the traders as well, because they will not. They will be keeping there some stock which may run.
It might run out of. It might expire.
It might expire.
Yes.
And it may also affects government, because there will be no new taxes. I mean, tax revenue coming in. Because traders will not be able to dispose of these stock and buy fresh ones.
Right.
You know, I mean, through the government gets money. You know, what does the taxation?
Right.
And yeah, I think that's it. So it is not going to be a very, very
it's
good,
an easy run.
An easy run, no.
Let's get the clarity here. The people are talking about are stockists, wholesalers, broadly. So people up country will run short of goods.
Yes, people will run.
Ever-ready batteries, fry, you know,
everybody will have
everything.
Everybody will have nothing. Huh? I mean, I'm not going to go to a shop to buy anything because it's closed. Whether it is batteries or clothes or what, if they close their shops, I mean, you'll not buy anything. The ordinary person will suffer.
You can only go to the shopping mall, maybe, because those will not be on strike, will they?
Why? I mean, they're also traders. How can they not be on strike? Anyway, I don't know the membership of Kizito, for example, but that's the the issue is very serious because it looks like all the upcountry traders depend on
Kampala to stock their shops.
To stock their shops. So the whole of Kikumu may close. And the people coming from Tororo,
from
Arua, from whatever place, may not get any goods. You know, and the shops will be closed.
Right.
Yes.
Who does it hit most?
It is the common man as well, now very, very hard.
But also it's the economy. The government cannot collect taxes, URA.
Yeah, it also hits, but the government, of course, works with the people. It collects taxes so that people can, so the services can provide it. So you find that they cannot even do that.
So there will be a shortfall in revenue collection.
Shortfall in revenue collection, failure by the ordinary man to
access goods.
The traders will not be having any
income.
The goods will remain in the stores. You know.
The transporters will lose revenue. Fuel companies will not sell fuel to those transporters.
Fuel companies, you know, there is going to be a crisis.
It's a spiral.
Yes.
You don't want to think about it.
But yeah, in fact, nobody would want to think about that. And I just wished maybe government came out with a solution by today.
And this will be about the third strike in about 15 years. They had one in 96, October.
Yes.
They had one last year. This will be the third one. Coming very close to each other, it will have a very bad effect. Very, very bad effect.
And it is not going to remain only here. Even suppliers overseas will say, oh, there's nothing going on in Uganda. And therefore, there's no need to keep trading with those people.
How does that shape out?
It is not very good image.
The image abroad will also suffer.
Will also suffer.
With the suppliers.
With the suppliers. Manufacturing industries will fail to operate.
Even locally, the manufacturers, Mukwano industries and so on and so forth.
Will fail to operate. Yes.
So it will set us back. How long would it take us if they close shop for 3 days, for instance? How long would it take the economy to, ripple over that?
First of all, there's going to be a bang, and you don't know exactly how long that bang can last. It is something that may have spirals. Yes.
Explain that a little bit more to us. That bang.
You see, all of a sudden, there will be no supply of goods anywhere. There will be no purchases. There will be no purchases. For 12 hours, there's going to be a standstill. Now, to come out of that will take time. You know, people will begin slowly to open up, to convince their suppliers, to convince the people they sell to, and that may take months.
So it's like you break a chain and then you have to reconnect it.
Yes, reconnect it. That's it.
Listeners, this is yes?
I have a feeling that the traders will be more, are slightly more responsible than we're hearing in the press. Maybe.
Well, but they've done it before. They closed shops last year.
Yeah, but this is something done at a time when we're really seeing, some solutions coming up. You know, I mean, the inflation is coming down, the rates are coming down, the central bank and so on. You know, it is something which I thought would wait a bit so that we at least don't, you know, create a crisis in the country.
Listeners, this is Spectrum on Radio 1. Tonight, do you support the decision by traders to go on strike over the high interest rates? What action should the relevant actors take to diffuse this situation and also to overhaul the Ugandan economy? Yesterday there was a high-powered meeting at the at Parliament. Today there has been a meeting at the Prime Minister's office between the traders, but they have apparently failed to convince the traders to call off their strike. We're still waiting. There might be news on that side, probably news that will mean the strike has been.
I heard somebody walked away from the meeting.
Well, news is still coming in. Let's talk about the run on the bank. Supposing they decide to withdraw their money, what happens?
The banks will collapse. That's immediate. Because, I mean, we all know in economics that the banks depend on people's money. So if they withdraw their money, I don't know where they're going to put their money anyway, maybe under mattresses and so on.
Yes.
But the banks will have no money to do any other business with.
Let's look at a picture scenario. Yes. Tomorrow, they go to the bank. Someone has 30 million, it takes 20.
I think they're saying they're taking all their money out of it.
Well,
somebody has 30 million, it takes 30 million. So the bank has a shortfall of 30 million.
Well, these are only traders. There are other people, players, corporates, and so on, and private individuals.
Yes, I mean, those are there. But you know very well the traders, I think, is the biggest part of the bank customers.
Maybe 40%.
No, slightly more.
Slightly more than 40%.
Yes, more than 40%. And therefore, their action can cripple banks.
This is a run on all banks.
Yes.
A run on one bank is bad enough to shake the banking industry.
The banking industry.
We saw what happened with Greenland Bank, with the cooperative bank in the 90s. International
Credit Bank, yes. So, if it is all banks, the situation will be dire.
Let's try to understand it better. A run on one bank. Describe for us a scenario. What happens when there's a run on the bank? What normally happens?
It happens this way. The bank all of a sudden realizes that people have come on one day and taken away all their money. Their customers have taken away all the money, and they don't have any money left to pay out. Of course, there are fixed deposits there.
Yes, which they cannot take out.
Which they cannot take out. So there is no money to give to other customers or anybody else who may want a loan, who may want anything like some money to use, and therefore the bank remains without any income. You know?
Or even stock. Let's look at someone who sells maybe maize flour, and he gets it from suppliers, and all of a sudden the suppliers come and say, we're taking our maize flour out, and it has nothing to sell.
There's nothing to sell. So
well,
there's no money.
This is Spectrum. We're going for a break. We'll be back. Do stay tuned to Radio 1.
Fellow Ugandans, the United Nations has declared that access to the internet is a universal human right, along with access to water and food. Like the UN, we believe that every Ugandan should enjoy this right. We believe that access to information, education, and improved communication through the internet will build this great nation. And it is because of what we so strongly believe that we are giving every single MTN customer 10 megabytes of free data on their mobiles. And everyone can start experiencing it now.
Follow us on facebook.com/MTNUG or twitter.com/MTNUgandaCare. This announcement was brought to you by MTN.
John, Mike and I, we go back a bit. We knew John at the beginning, working for someone else. But he was different. He had vision, saw opportunities. He started working towards his goal, opened his own garage, and worked, learning the hard way. His reputation spread. Trust, consistency, quality. Soon people were coming to him from all parts. He made himself and his whole street prosper, and also helped friends, seeing potential in people and helping them on. But John never shouts about all his success. He's just who he is. Special.
So here's to men like John, who make a difference, who enjoy Nile Special, the rich, satisfying taste from the source. Nile Special. You've earned it.
Not for sale to persons under 18.
Spectrum on Radio 1 FM 90 is brought to you by Stanbic Bank.
Welcome back to Spectrum on Radio 1 tonight. Do you support the decision by traders to go on strike over the high interest rates? What action should the relevant actors take to diffuse this situation and also to overhaul the Ugandan economy? Our guest tonight is Honorable William Oketcho, former West Budama County MP, also former chairman of the Budget Committee in Parliament. You'll also be able to contribute to this discussion. I'll read out the numbers when that time comes. Honorable Oketcho, let's look at the other demand, the other threat by the traders, a run on the banks. Let's start with the scenario of one bank. What normally triggers the run on the bank? When people say we've had it, we have to get our money from the bank. Normally, what triggers it?
Normally, when there is a problem within the bank,
yes,
people have lost confidence in that particular bank. That's when that bank may have the run on itself, on it, by the customers,
depositors.
Yeah, depositors.
Normally, there's a rumor in the market that such and let's use the word cooperative bank is going to close.
It's going to close,
and people say our money is not safe, so they go and say, "Let me withdraw my money before it closes."
Before it closes.
Let's look at Greenland Bank a little bit about the history. What happened with Greenland Bank?
I think people also lost confidence in it because the central bank, I think, started to audit it and so on, and people didn't really. And I think the central bank closed it itself.
They closed it, and people lost money. I think
lost money.
Only 3 million shillings is insured.
Yes.
If you have 100 million, when the bank is closed, you get only 3 million. Is that
3 million? Yes, that's it. Goes 10%.
So, can anyone stop this run on the bank legally?
Legally. This is a matter of conscience, a matter of perception as well of the customers. It can be very difficult to stop this if the customers decide we are going to get our money.
Well, businesses can declare insolvency. For instance, if it's losing on the stock exchange, it can declare insolvency and they can suspend trading. Can a bank not decide to close its doors? They could say we're not open for business, so you can't draw your money until there's a safer time to do it.
Being run on is something spontaneous. They don't tell you that tomorrow we're going to run on you. And therefore you begin the liquidation processes, which will kind of keep them away. I mean, in this particular case, it is possible that the banks could take up some measures, but because it is only 3 days.
Well, it's tomorrow.
It's tomorrow.
They say they want to do it over 3 days: Wednesday, Thursday, and Friday. If you have 30 million, draw 10 tomorrow, 10 the other day, and 10 on Friday.
Yes, and that of course is bad enough. The bank can do nothing.
And you're saying that the traders, the people who want to withdraw their money, they have about, I was looking at some figures, they have about 50-something%. They account for about 50-something% of the money.
Of the deposits.
The deposits, $9 trillion, 9 trillion Uganda shillings.
Mm-hmm.
They account for about 50-something%. So that, they're basically saying, let there be no banking.
Yes, that's it. Let there be no banking. By the way, those are traders. If they decide to run on the bank and remove the 51% or so of the deposits of the central bank,
yes.
Of the commercial banks,
yes,
the other customers of the banks may not have money to withdraw, because the bank also has got to keep a certain amount of money, a percentage
in the central bank.
In the
they have a cash reserve ratio.
The cash reserve ratios, which they must keep, and therefore the other customers may have nothing to withdraw.
So technically speaking, some of it obviously has been lent out.
Yes, has been lent out already, and there was not there in the bank.
So you might go to the bank and they tell you we don't have money.
We don't have money, but I think. Just hope this situation is not going to occur tomorrow, and some reason will come our way, and we preserve this economy from collapse.
You're saying the economy could collapse?
Yes. That's it.
If the traders carry out their threat, the Ugandan economy, thriving since 1987, could collapse.
Could collapse. And that is not something very nice to hear. Especially in a situation where we know that we have come from very far and we had built a lot of confidence into our economy from international organizations, the national people, the community, local community, and so on, and things are moving very well. You know?
So this could take us back to 1985. It's a declaration of war.
Yeah, it is a war situation.
The traders are by proxy declaring a war on the economy.
Or the economy.
They could destroy it within a few days.
They could.
By the time we sit
if
here,
you're talking about 51% of the depots in this country belong to traders.
That's true from some figures I was looking at today from the central bank.
Then it is a very, very, very difficult situation, which I think we should be able to forestall by midnight tonight.
And banks won't have 52% of those deposits. Some of it is already in loans. Much of it. Some of it is with the central bank. Some of it is in foreign reserves, hard currency in foreign economies.
Yes. The shilling will collapse.
The shilling will collapse.
Yes, again.
3,000 to the exchange rate.
Beyond, we don't know when. I mean, where it will go. The next level will be very difficult to understand. To estimate.
So this is a very serious situation. We could sit here this time next week and we're talking about totally different worlds.
Talking about different world.
What can government do to forestall this?
The government has got to convince these traders not to take this strike action in some way. If there is a way they can convince them to give the government or central bank time to decide on what to do, which can be a kind of win-win situation, that would do it.
The president has been silent. The prime minister, they've not been able to speak the same language. Yesterday, the central bank governor was there, the revenue authority officials, finance ministry officials. How do you explain this? Yesterday's meeting was a very big meeting.
A very big meeting, and I think they should have come up with a solution. Yes. I don't know why it failed.
No, but what could they do yesterday?
To make it clear to the traders that they are going to see a better Uganda very soon.
If they tighten the belt.
If they tighten their belts. They're going to convince them.
So it's a communication problem.
It's a communication problem, I think.
It's not substance. Because I was looking at the governor spoke yesterday.
Yes.
It all makes sense. He says he cannot intervene with the banks because that would be running their business on their behalf.
Yeah, also it is difficult for the central bank to even use its CBR, because the banks and the central bank uses that rate to lend to commercial banks and also doing business. So it may be a bit of a problem actually using. And also there is the question of inflation.
Yes.
Yes, the inflation is still high, but it's falling. And therefore, you cannot push one too low while the other is still not coming as low.
Right.
Yes.
Let's get it clear. Inflation is 27%, having fallen from 30 about 2 months ago.
Yes.
So there's a good trend is falling.
There's a good trend, yes.
The CBR rate is 23%.
23%.
The bank rate, which is different from the CBR, is 28%. So banks borrow from the central bank at 28%.
Yes.
It's fallen from 29 in December. 29. So traders should have the hope that it's going to fall even further. So if they wait 3 months, things will get better. If they push the hand of the banks, they will destroy their own business.
Destroy their own fortunes, and I don't think that's good enough.
They'll not be able to import because the shilling will be, the dollar will cost maybe 4,000 shillings. The pound maybe.
And also producing a lot of goods now to replenish,
we don't have exports.
We don't have too much exports. As you know very well, even the Cheyu money has surpassed our exports.
Christmas has gone, come and gone. Diaspora money, the boys and girls have left.
You see, the $1 billion they brought in.
It was less than $1 billion this time.
Yes, has been used up to stabilize the shilling. I think that's it.
So the problem is communication. The government is not speaking to these people in the language they understand.
I think it is communication. And then trust. The traders should be able to trust the people talking, that they are meaning, what they're saying.
Yes. So it's a political problem as well. It's more than economic.
Yeah, it is also a political problem. Maybe the head of state should come in.
The head of state should come in.
Yes, because I think that's the language. I mean, that's the one they may
should make some phone calls tonight.
They should make some phone calls. Should be able to, because remaining silent is worse. is worse.
By the time we speak tomorrow, this time tomorrow, it's a totally different economy.
Things will be bad.
If they raid the banks tomorrow, that's a disaster. If they close the these are two different measures which are heavy measures. Each of them can destroy the economy. But now both of them are coming.
Both of them come at the same time.
It's a double barrel attack.
Yes, double attack. And I think it is all because of the inflation that befell this country.
Let's look a little bit about the inflation, the roots of it. Of course, we had a drought, so food prices went up. But they began to fall as rain began to come.
Yes,
but food crops. But then we still have the problem of imported inflation.
Imported inflation is there, and therefore, we cannot say that we have gone away from the factors that cause the other inflation.
Then we had the Middle East crisis.
Yes, the oil prices
went up, and recently they've been edging up a little bit. 39, they fell from 3,900, 38.50. Now they've gone to 39.50 in many places.
Again.
Then some people think there was a lot of campaign cash poured into the economy. It's actually true. Money was given to the Electoral Commission to run the economy. Candidates spend money in the economy.
Spend money, and money came from all corners of the world into this economy.
Even if it were legitimate spending,
yes,
it was a lot of money poured into the economy at the same time.
At the same time.
And this election, a lot of money was poured in.
Yes.
And of course there was the Eurozone crisis.
As well. That led to the imported inflation that we're talking about. Or the imported dire economic situation, so to speak.
Right. And the world financial market, the oil crisis that had been there before.
Had been there before. So, you can talk of all kinds of issues and reasons for all this.
What good could government have done to mitigate some of these things?
No, the only thing I would call for is restraint by ourselves as nationals, as Ugandans, to wait for the situation to be managed. And I think the trend was there. When I read all these things in the papers and I hear, people talk and so on, I see the trend is towards towards bettering the whole situation. It is not something which one says not being tackled. I mean, as the central bank governor said yesterday, let's wait. It is for the good of everybody.
That's true. I've read his statement. It's an elaborate statement, which makes it crystal clear that that's what needs to be done.
That's what needs to be done.
If you force his hand, you're destroying the economy.
Destroying the economy. I just heard this evening when I was coming here that Uganda, I think, is one of the 9 countries expected to
grow fastest.
To grow fastest, this year and this decade. I mean, the coming decade.
One of the top 10. It's one of the top 10 best performing economies.
Yes, one of the top 10 best performing economies. Do you want to destroy that? I don't think so.
So you're saying these actions by traders tomorrow through to Friday could destroy this economy?
Destroy that economy, yes. And then leave us in a total mess again, and shall not be one of the top 10 in the world to perform very well. The economy has been managed extremely well. Let me tell you this. From all angles. You talk of the IMF, talk of the World Bank, talk of the African Development Bank, every economic
indicator, macroeconomic indicators.
Macroeconomic indicators are good. So let's just hold our guns, and if possible, the government can promise within 3 months the situation will be okay. If it doesn't, then the traders can come back and say, you told us this, what has happened?
So the government is not speaking the way it should be speaking. Talk to us about trust. Where does government lose trust in the eyes of the traders?
I don't really see where, because the government, not the only people, not maybe the entire government. Lucky enough, the meeting was yesterday in Parliament, and I thought the country has got very high trust on the Parliament of Uganda now.
They also brought in other people, manufacturers associations.
Yes, they brought in everybody. I thought if it was chaired well, if everybody spoke what was understood by the traders, they should have moved very, very smoothly.
And maybe it would not have come to that. They would have spoken earlier, so that yesterday's meeting would not have been necessary.
Would have been necessary either also. But now that they're all there, I think everybody was hearing what the other was saying, and therefore they should have, it is nationalism now at stake.
People should dig into their heart.
Yes, we should close their eyes. Yes, and say, okay, this is what the situation is. We are seeing some light at the end of a tunnel. let's wait a bit.
So you're saying if we bite the bullet now, 3 months down the road, inflation would have come down and things would have begun to normalize?
Yes. Since the government, I think the central bank is saying, give us time. You know, and Mukitale is fairly known for this economic management. I mean, good economic management. So it shouldn't be a real problem. You know, people trusting him.
Well, but I spoke talking to someone this evening who said, well, he gave money for the jets. Some people think it wasn't a good idea, and some people think it messed up this economy to a certain extent. Is that legitimate?
I don't think so. The money for the jets, and also jets purchase in a particular, you know, I think the government gave us a reason. We are in a situation where
let's talk about the technical part of it. Taking $740 million out of the central bank, that's like, you know, closing NSSF, taking out all their money.
What was our reserve level?
Well, it was about $3 billion.
Yes, and we've had, you know, less reserves than that before.
We still had healthy reserves, 3.5 months.
Yes, 3.5 months of, you know, so really that was, I mean, that didn't impact much. But of course it had to be replaced, as the central bank governor was saying that he had promised that it was going to be replaced, and I think it would.
But you know, Mr. Oketcho, markets work on sentiments. When the governor, well, the money was taken out, we didn't feel the effects. When the governor went to London, he spoke to the Financial Times newspaper, and there was a problem with the exchange rate immediately.
Yes, of course, when you're a bank governor, you have got to know what to say at what.
Weigh your words.
Yes.
So it was a big mistake for him to have spoken.
You have got to weigh your words. You know, I mean, when you used to hear the Reserve Bank president talking,
Alan Greenspan in those days.
Yes, the
financial world would stop.
The financial world would
hear his every breath.
Yes, we'll have a heavy breath for that. You know, so it is not. And I hope it was not quoted out of context.
He never denied it.
It is not useful for maybe the person I know to talk responsibly.
Well, it happened. Listeners, you can call in now. Our number 041-4348-111, 031-226-0390, 031-261-390. When you call in, please tell us your name and where you are calling from. This is Spectrum on Radio 1. Spectrum, hello?
Hello?
Yes, sir, your name?
This is Gerard Mandela. I think the direction traders want to be very disastrous. They should be advised to be patient, because what the central bank is taking is just a tool to curb the current financial situation. Otherwise, if force things and things are done mechanically, I think they will regret much more than what they think. Thank you.
Spectrum, hello?
Hello.
Yes, your name?
My name is Eresu.
Yes.
There are things we must look at. One, I think the traders are still being ignorant about the whole economic management, because the net effect of all these things will impact on them finally, and not the banks. The banks will suffer it in the short run, but the traders will suffer it in the long run. Anyway, I think the overall economic policy of the country must make a paradigm shift from that liberal economic policy for the long term benefit of this country, to take stock of some of these economic shocks which come in. For example, this aspect of thinking that through liberal trade, through liberal economic policies, the country will develop. There is no country in the world which has developed as a result of demand and supply economic policy system. All of them developed as a result of protectionism. If anybody tells me any country in the world which has developed using liberal economic policy, I bet in my head. So, for that reason, therefore, to have a sound economic base in the long run, we should have strategic economic plans which must which can make a sound economic base for this country, so that certain aspects of the economy which tend to weather as a result of shocks which come from outside can be shock absorbed by the economy as it is. And that's the strength of the overall thing, so that inflation can also be contained, because there will be production from within.
Spectrum, thank you very much, Honorable. I think that's Honorable resume for my MP, Spectrum, hello?
Hello?
Yes, sir, your name?
Hello?
Yes, your name.
Yes, good evening, Edmond.
Good evening, your name?
Hello?
Hello? You're live on Spectrum. Please talk to us. Hello? Hello? Spectrum. Hello? Okay. You can still call in. Hello?
Edmond.
Yes, your name?
Good evening, sir.
Good evening, your name?
Thank you for seeing that guest. I want to salute him for his activation. My appeal to the traders that when they had a problem, I think the governor, professor, told them. I understand that Professor Mukitale is an expert because he has been in the financial field for almost from 1970s, and I don't think he has the bias on traders. He told them they should just accept because that's a technical matter. When you say that you are going to close shops, you are not going to get, you're going to be the loser if you close a shop maybe 3 days. The landlord will need his rent, and other costs will increase. So to me, I just want to advise our traders because most of the traders, they have their money, but they are not so technical in monetary policies and physical policies. So they should abide with the governor, Mr. Mukitale. Thank you.
Oh, fine. Call a Spectrum. Hello? Hello? Okay. Hello?
Yes, hello?
Yes, sir, your name?
This is Lawrence from Motongo.
Yes, Lawrence?
I think the traders, they are wrong if they say that they are going to close the shops because they didn't pay much attention to the details when they were signing out their loans. Because their problem right now is the increase on the interest of the prior loans they had acquired before the Bank of Uganda had come in to increase its CDR. Therefore, we should put more emphasis on details pertaining their acquirements in the loan processing. That's it.
Let's get our final caller. Spectrum, hello? Hello? All right. Hello, your name?
Hello, this is Joseph.
Yes, Joseph.
Thank you. I thank you for that gift, but my concern is one. I think the traders have a genuine concern. All they are saying is they don't have a problem with the new interest rate. But they should leave those loans which were taken before this new arrangement came in to remain at the agreed interest rates of 17, 18, whatever the rate was. But when you say the new exchange rate, rather interest rate should even impact on the people who took loans 2, 3, 4 years back, I think that's being unfair. I think the traders, all they are demanding is the new applicants of loans, okay, they can take whatever rate the Bank of Uganda would like to put in place, but not the old loans, for heaven's sake. I think there is a genuine concern there. Thank you.
Honorable Oketcho.
Yes. Edmond, this is very interesting.
Yes.
Our listeners, I think almost all of them, we've had 5 who have responded. 4 of them have said that the traders should kind of restrain themselves from taking any action that may actually jeopardize their own position later on. I think that's the point we've been trying to stress all along. We know there is a possibility that things are moving towards the right direction. So it is important that we restrain ourselves as Ugandans, so that we can go through this period and we all live a better life thereafter. Joseph says that the traders generally disagree with the idea that the loan repayment at this moment should not be at the current interest rates.
Yes, the old loans.
The old loans. But today I checked with several banks.
Yes.
I asked them, what are the terms of the loans that you have been dishing out?
Yes.
With respect to interest rates? They said all the loan documents that I saw were saying variable interest rates. And this is the meaning of variable interest rates.
Right.
You know, as somebody said, that most likely our traders, and we're not aware of this.
They signed without reading the close print.
They signed without reading the small prints, and that's very unfortunate. Even you, even me, when I'm in need of credit,
you don't look at the final details. So, where do I sign? What do I sign?
But I think this is the first time that our traders are being made to look at the fine prints of whatever financial document they are signing, and this is a real problem. Now, I don't know whether the central bank, using its role as a banker to the commercial banks and supervisor of the commercial banks, you know, and so on, bank of last resort, and so on, can persuade, and I'm just underlining the word persuade, commercial banks to handle, to kind of treat these loans, much of the old loans, at the old interest rates.
Yes.
If that is possible, that could be a solution. But I doubt whether it is possible, because banks are also, you know, business people, yes. and they want to stick to the terms of the agreements that they sign with their clients. It may not be very easy, you know. But if that was done, and of course, Kasira should not push for it. It is something which, you know, maybe the governor of the central bank, who controls these banks, can, you know, plead.
Persuade him. Well, I'll read out something. But the part of the statement that he made yesterday, he said, in addition, by Bank of Uganda intervening in commercial banks' price setting, that's setting interest rates,
yes,
it would have to share that responsibility in case of losses incurred.
Losses incurred. No, but of course here we're talking at. We're looking at. Applying the old, which is lower interest rates than
well, but they say you signed against variable rates, so yes, we cannot change. If you change, you lose money. We are paying you to keep money with us.
Yeah, that's it. But I'm saying this is just persuasion, so to speak.
Moral persuasion.
Yeah, moral persuasion.
All right, we have to go.
It's not something which you can enforce.
All right, we have to go. Thank you very much indeed, our dear guest, Honorable William Oketcho, former West Budama County MP, former chairman of the Budget Committee in Parliament. So your final word is, let the traders restrain themselves. They could destroy this economy. Take us back to the early 80s. Time, it's like a war.
Let the traders restrain themselves.
Don't go to the banks to draw your money.
Don't
close your shops.
Don't close your shops. Don't ask people not to pay the electricity bills,
because it will spiral down on them.
It will spiral down on
everyone, all of us.
And you also know that, well, as one of the callers say, they must know that they're continuing to pay rents for their premises,
even though they are there. We have to go. Thank you very much indeed, thank you for tuning in. I've been your host, Edmond to Spectrum. We'll be back tomorrow. Up next is the news in English. Do stay tuned to Radio 1.
Just like an uncut diamond is brought to life by unmatched skill and dedication, only our brewmaster holds the secret to crafting a crystal mold.